So hello guys, today we from Tax667 we're going to bring a topic of real estate investment trust. So we use the concept of documentary and we'll seek accounting student and see how their understanding on real estate investment trust. So let's go. So we have found our target, first target. So let's go. Okay, hi. What's your name?
My name is Izzuddin.
Are you a counseling student?
Yes.
Okay, I want to ask you, have you heard of REIT before?
Oh, it sounds familiar to me.
Okay, what's REIT stands for?
REIT stands for Real Estate Investment Trust. REIT is a special type of unit trust that purpose to invest at least 50% of total income in real estate. For your information, REIT also known as property unit fund, and the main sources of income of REIT is the rental income. Okay, I have a question to you.
Yeah.
Did you know who organization approved REIT?
No.
Okay, the organization who approved REIT is Security Commissions.
So have you heard about a basis year?
Oh,
In terms of basis year.
okay. Basis year, as I know, is a year assessment for REIT based on financial year end, which means 31st December or 31st December. Oh, I forgot something. Okay, for REIT, is include land, building, or share, or bond, and in real estate company.
So is that all you want to share with us?
Yes.
Okay,
that's
thank
all.
you. Easy. You need to pick up the call, okay? Okay, let's go with the next person.
Hello.
Here we are with the second question and second person. I introduce to you Mr. Shami. Shami, hi.
Hi.
Okay, have you heard about REIT before?
Yes, what?
Do you know that rental income is a part of REIT?
Yes, of course.
So please tell us a little bit about your knowledge in the REIT regarding with the rental income.
From what I recall, rental income is an income, of course, an income received from letting of property to tenants. Rental income should be treated as gross income in the computation of total income. This special tax treatment is subject to first the amount deductible expenses incurred in the year of assessment is restricted to the amount of gross income. Any excess of expenses should be disregarded, or should we call permanent loss. Second, this same goes to capital allowance. Although the capital allowance is available against rental income, but if there is an excess of capital allowance, this should be disregarded or permanent loss. And lastly, deductible expenses are allowed only when the property produce income.
So I had heard about the exemption of income. Do you know that exemption of income that play around with the REIT?
Quite some of I heard, since REITs or PTF is also a unit trust, thus all exemption received by unit trust also available for REITs. Some of the exemption that I might recall, like dividend income, can be exempt. Discount income or interest income will also be exempt, because government want to promote investment in private or public debt securities. Also, interest from suku and interest received from pengurusan dana harta bonds. That's what I recall.
So any other information that you want to share with us?
yes, there's one. There is the what we call it fraction of permitted expenses, if I'm not mistaken. The REITs or PTF can only claim deduction on qualifying expenditure if and only if the expenses does not exceed the rental income.
Is that it?
Yeah.
Okay, thank you, Encik Syamil. Let's go with the next question. Taku. So we move with our third question regarding distribution to unit holders. Okay, I found our next target behind that. So hi, are you a accounting student?
Yes, I am.
What's your name?
My name is Abdul Halim.
Have you heard about REIT before?
Yes, a little bit.
Okay, do you know any term regarding distribution to unit holders?
Oh, distribution to unit holders. From what I remember, there's four distribution to unit holders, which is REIT level, withholding tax, unit holders, and also refund mechanism. For REIT level, tax is pre-deducted at 24% on dividend distributed to unit holders. Unit holders may claim the refund only upon submission of their returns in the following year. If the distribution income is more than 90% of total income, and the distribution of is deemed derived from leisure, the chargeable income will be tax exempted in order to boost the market on REIT. If less than 90%, the chargeable income will be fully taxable.
So any other information you want to share with us?
Not really.
Not really. Okay, thank you, Abdul Halim. So let's move to our next question. Okay, move to the next question. I found an interesting guy who play chess all by himself. Introduce to you Haziq Nasir.
Yes.
So Haziq Nasir, regarding to our discussion about REIT earlier, so can you share with us on the camera about unit holders?
Yeah, sure. Unit holders that receive the net net amount distributed need not to account for the tax liability, and there will be no tax credit for the dividend received to the unit holders. So that's it.
Okay, regarding refund mechanism, can you elaborate on that?
Yeah, sure. Refund mechanism.
Yes.
As stated in the provision 127 clause 5, has been stated that some unit holders, that all unit holders are eligible to apply for tax refund in the event that unit holders exempted from paying income tax.
Is that it?
Yeah, it's simple.
It's simple. Yes. So thank you, Encik Haziq.
Checkmate.
Checkmate. Okay, thank you.
Okay.
Good luck with your tournament.
Thank you.
So we move to the next question and next person. I found the fifth person with the fifth question. He's down there. So hi.
Hi,
Okay, what's your name?
I'm Ashraf.
Okay, are you a accounting student?
Yup.
Okay, have you heard about any REIT terms?
Yes. Is it the Real Estate Investment Trust?
Yes, that's true. So
Okay.
regarding REIT, there's this a term of distribution to unit holder.
Uh-huh.
Within that, there are some topics which is withholding tax and also REIT level.
Mhm.
So what I want to ask you about withholding tax.
Mhm.
So can you explain or do you know any term of regarding withholding tax?
Okay, I think I know something about the withholding tax.
Okay.
Okay. As you may know, that the rate level is at 90%,
Okay.
and if it is above the 90% for distribution to holders, then the payer will be tax exempted. The rate will be tax exempted. If it is below, then it will be tax chargeable for the full amount of total income.
Okay.
Alright. Okay. For the rate, may be exempted from tax at the REIT level, but this does not mean the income distributed to unit holders are also exempted. Because the payer, which is the REIT, the trust body, is required to deduct tax at the rate applicable to that withholder. Okay. The withholding tax rate being issued by the IRB for the year assessment 2016 until 2019 for the resident and non-resident individual, as well as resident entities, tax subject to 10%. Same goes to the foreign institutional investors, which is same to 10%. While for the non-resident company, they are subject to 24% tax charge. Okay. Other than that, for the non-resident company, the payer, which is the investment trust, must remit the amount withheld to the Director General of Inland Revenue Board, the DGIR to be short, and within 1 month after the distributing the income to the unit holder. Then the payer must pay the withholding tax on gross income distributed in respect of all its unit holders, because it is a payment as a with a global basis. Okay, and in addition, since it's a global basis, then the registration of file will be for the payee only and not for each unit holder.
You seem like very knowledgeable about this thing. Are you just studying about this thing?
Yeah, actually I just reading it from the books.
Okay. Are you any other information that you want to share with us?
I don't think so.
Okay, thank you, Mr.
Okay.
Acham.
Alright.
Okay, let's go with the next question. Okay, for the sixth person, we didn't find any person inside the library, so let's give a call to the person that I know. So if I'm not mistaken, his name is Mr. Imran. So let's give a call. Hope that he's not busy. Toot toot.
2 plus 2, 4.
Toot
Easy math.
toot. Toot 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 toot.
The number you have dialed is not in service.
Hello, Mr. Imran. Please answer that call.
Oh.
I know that you're faking it.
Hello?
Okay, hello, Mr. Imran. Are you busy?
Yes?
Are you busy?
Yeah, I'm so busy. Why?
I want to get a help from you. About 5 minutes. Can I?
Yeah, sure.
Okay. So do you know anything about REIT?
REIT, okay? I know.
Okay. So the question sounds like this. The responsibility of REIT. Can you tell us about the responsibility of REIT?
Oh, the responsibility of REIT. Okay, wait. Okay, responsibility of REIT. Okay, the responsibility of REIT. Okay, the responsibility of REIT. Where a REIT distribute income to a unit holder other than a unit holder which is a resident company, tax need to be deducted. Okay, the net distribution is paid to such unit holder, and the tax authority and the tax deducted should be paid to the IRB within 1 month after distributing the income. Okay, an account must also rendered to the tax authorities. Okay, what is the next question? Please, 5 minutes, 5 minutes.
5 minutes. What you want to do?
I am a little bit busy marking my students' paper.
One last question. Okay.
Okay.
Okay. The question sounds like this. So the question is about how. What if they don't comply with that responsibility?
Sorry?
What if they don't comply with that responsibility?
What?
Hello?
Hello? Okay.
Hello? Are
Okay,
you there?
can you repeat the question?
Okay. what if they don't comply with the responsibility?
Oh, not comply.
Yeah.
Okay. The non compliance to this REIT will result in a penalty of 10% of the unpaid tax, and also both the tax deducted and the penalty are tax due to government. Okay, this apply on or after 2 September 2006. Prior to this, the penalty is imposed on distribution. Okay, you get it? You better listen to me lah. I'm a professor mah.
Oh, you already a professor?
Yeah.
I thought you still a mister.
No, professor.
Okay,
Just
sorry.
graduate UiTM.
Okay, sorry, Professor.
Okay.
Hope that you can continue your work on marking your student work.
Okay.
So yeah, see you again. Thank you. Bye.
Don't disturb me.
Okay. Bye.
Hey, professor.
Hey.
Is that? Just put me.
Yeah.
Hey. Okay, let's start.
Okay, for the last question and for the last person, I didn't find any person inside the library. So let's use another alternative, which is stop any car outside the building. So there is.
Yes?
Okay. What's your name?
My name is Ismail.
Okay, are you accounting student?
Yes, I'm a college student.
Okay, I have some question. Can you please cooperate with us?
I think so. I can.
Okay.
I try my best.
Do you know anything about REIT?
I know only a bit about it.
Only a bit about it. Okay, so let's ask some question. I think about 3 questions. Can you give some time for that?
I think I can. 5 minutes can.
Okay.
Alright.
Okay. The first question is about RPGT tax rate, something like that. Have you ever encountered that term?
Yeah.
RPGT. So
I think I counted that.
okay, what your knowledge about that?
I think it started on 1st January 2014. I think if the company want to dispose the building within 3 years, there will be they need to pay tax of RPGT means tax, right? Real property gain tax of 30%. And it will decrease by year until the 5th year. If 4th year, I think about 20%. If want to dispose on the 5th year, 15%. And after that will be 0. So, in my opinion, if you want to dispose it after 5 years. So you don't need to pay tax.
Okay. So how about the setup of the REIT?
I think affected after YA, I mean year assessment, 2006. The valuation fees, the legal fees, and the consultancy fees that in connection with the REIT prior to the year of approval from the Security Commission. Those
Okay.
3, if being approved by the Security Commission, will be having a tax deduction, but only at a year assessment of when the REIT, I mean the trust, right? REIT being commenced. Only that year you can get the tax deduction. After that you cannot.
Okay. Last question regarding about the disposal of the REIT or RPGT. Do you know any story?
I think so. Yeah.
Okay. So share with the camera.
Alright. So if the company want to dispose the industrial building, and the building has been claimed, I mean already claimed the annual and also the initial allowance to REIT, after being claims, and then the building is disposed, right? The disposal will not having a balancing charge, so it will benefit the company that disposed that building.
Any additional information you want to share with us before we end up our session?
I think I don't have any additional info to you.
Okay, if that's so, thank you, Ismail.
Alright.
So let's
you very much.
have a safe journey home.
Alright.
So let's see you in the future.
Alright, okay, thank you.
Okay, thank you.
Yeah.
Okay, so from the interview we have done today, we can conclude that this REIT tax incentive is to boost up the development of REIT in Malaysia. So let's hope that this will further be able to reap all the profit higher and also in turn to pay the dividend higher to the unit holder. So thank you for watching us and we see again.
Cut!
Okay, wrap up guys, wrap up. Masuk.
Dia masuk.
Balik.